Welcome to my YouTube channel, The Executive Outcomes. My name is Michael Mwanzaliova. In today's presentation, we are going to cover partnership taxation in Zambia. According to Partnership Act of 1890, partnership is the relationship which subsists between persons carrying on a business in common with a view of profit. In this regard, a partnership is a business structure where two or more persons or individuals or entities manage and operate a business in accordance with terms and objectives set out in a partnership deed. Let's look at the types of partnerships in Zambia. I'm going to provide an explanation of different partnerships, which are going to include general partnership, GP, limited partnership, LP, limited liability partnership, LLP. Let's look at taxation of general partnership. General partners are personally liable for partnership debts. Profits are taxed at the individual partner's tax rate, and there is no separate income tax filing for the partnership entity. For the first point, where I've said general partners are personally liable for partnership debts, it simply means that should the partnership contract debts and fail to pay or make good those debts, that obligation rests on the general partners to clear the debt as individuals. Let's look at taxation of limited partnership. There are certain taxation specifics for limited partnerships, which include the following. Limited partners have limited liability, meaning that the limited partners are only liable to pay the obligation to the extent of their contribution of partnership capital. Furthermore, limited partners are taxed on their share of partnership income. For general partners, these may have different tax treatment from limited partners. For limited partners, they are considered to have passive income since they are not actively involved in the day-to-day running of the partnership business. Let's try to understand what it means by limited liability partnership. A number of points can be said about limited liability partnership, which include: 1. This partnership combines aspects of partnerships and corporations. Secondly, partners have limited liability protection. Thirdly, partnership income is typically taxed at entity level. Let's look at partnership deed and taxation. It is emphasized that we need to look at the importance of a partnership deed. A number of points can be said about the partnership deed in terms of its importance. 1. It shows the tax implications often depend on the terms of the partnership agreement. And secondly, the deed should specify profit sharing ratios and capital contributions. Those are the main things that the partnership deed should reflect, amongst others. Income tax on partnership. When it comes to taxation of partnership income, the following need to be considered. 1. It's important to note that partnerships are typically pass-through entities for tax purposes. In this regard, Partnership income flows through to partners' individual tax returns. Thirdly, partners report their share of income, gains, losses, and deductions. Capital gains tax. What can we say about capital gains tax as it relates to partnership? A number of considerations can be made, which include: 1. Partnership may incur capital gains tax on the sale of assets. Secondly, the tax rate varies based on the type of asset and holding period. Let's look at withholding tax as it relates to partners. Withholding tax on distributions. Withholding tax on partner distribution can be considered under the following points. 1. Distribution to foreign partners may be subject to withholding tax. Secondly, Zambia has a double taxation agreement, DTAs, that can affect withholding tax rates. When you talk about withholding tax, we are relating to that type of tax where the remitter, the person who is remitting the money, retains part of the portion of that gross amount which is supposed to be paid to revenue authority. By so doing, that act is said to be an act of withholding an amount for tax purposes. So that kind of tax which is deducted at source in that manner is referred to as withholding tax. For partnerships, it's important to talk about compliance and reporting. So what are some of the tax compliance requirements? 1. It's required that partnership must file annual tax returns. 2. Partnerships should keep accurate records of income, expenses, and deductions. 3. Partnership should adhere to filing deadlines to avoid penalties. Having looked at a general overview about partnership taxation or taxation of partnerships in Zambia, I'm going to look at two examples. One is where we look at how do you tax partnership when during the charge year there is no change in partnership agreement. So that will be covered under example 1. And then example 2, I'll look at how the partnership are taxed when there is a change partway through the partnership annual period or tax year. So what happens in that particular case when partway through the charge year there's a change in the partnership agreement? That type of scenario will be looked at under example 2. These two examples will provide a typical exam kind of questions that are supposed to be looked at and understood on how best you can approach that type of exam questions. So we start with example 1, where there is no change in partnership agreement. Under this example, we have books, pen, and folder running a partnership business in training and consultancy. During charge year 2023, the partnership realized a taxable profit of 300,000 kwacha. The deed of partnership provided that the profit or losses were to be shared in the ratio 5:3:2 for books, pen, and folder respectively. The agreement also showed that the partners were to receive 10,000 kwacha per annum as a salary. Required: show the partnership taxable income for charge year 2023. Determine the tax liability for partners in the charge year 2023. So let's look at the first part of our task to show the taxable income for the partners. So here we are. We're supposed to come up with a table in this format, provide the table for details, total amount, the partners, which include books, pen, and folder. In this example, we are provided with information to the effect that each partner was to receive annual salary of 10,000 kwacha. Therefore, we are going to include under books 10,000, pen 10,000, and folder 10,000 as well. So when you add the three 10,000 kwachas, we have the figure under the total column 30,000. So the way to approach this is create rows. The first row relates to partner salaries. The second row should show the share of residual income, and the last row should show the grand total, or just the total. So in this particular example, we are provided that this partnership realized a 300,000 kwacha for the charge year 2023. So this 300,000 kwacha is shown under the totals column, total as 300,000 kwacha. Then we compare the total salaries and the total 300,000 kwacha in this case. So we subtract the total salaries from the total 300,000 kwacha, which leaves a residual income of 270,000 kwacha, being the difference between 30,000 and 300,000 kwacha. So this 270,000 is what remains when partners are paid a total of 30,000. Hence, it's referred to as the residual income. So this 270,000 kwacha needs to be shared by the three partners in the profit sharing ratio of 5:3:2. So to get the amount for books, we get 5 portions out of the possible 10 portions multiplied by 270,000. We are going to arrive at 135,000. For pen takes 3 portions out of the total 10, that is 5 plus 3 plus 2. Then multiply that one by what is being shared, 270,000. We are going to arrive at 81,000 kwacha. For folder, we're going to have 2 portions out of 10 multiplied by 270,000 kwacha. We are going to get 54,000 kwacha. Once that is done, we find the total under each partner. For partner books, we have 10,000 plus 135,000, giving us a total of 145,000. For pen, we have 10,000 added to 81,000, we have a total of 91,000. For folder, we have 10,000 plus 54,000, we have a total of 64,000. If we add 145,000 to 91,000 and 64,000, we get back the gross amount, which is 300,000 kwacha. So that shows how the taxable income is going to be distributed amongst the partners' books, pen, and folder. Now that we have managed to bring the partners to specific amounts to be taxed, let's see how they are actually taxed. So let's look at the computation of taxes under each partner. So you create a table for each partner that shows one column under each partner relating to taxable income, the second column under each partner, income tax. So under books, we have taxable income of 145,000 picked from this particular working. And then we have under pen 91,000 and also under folder 64,000 as depicted by this table. Now we look at how are these incomes under these partners taxed. We look at income tax. We are aware that during charge year 2023, every individual in Zambia has got 57,600 as the first part of his income subjected to 0% tax rate. So it's taken to be tax-free income. So we remove that first slice, that 57,600 from the gross of 145,000 under books, we are going to end up with 87,400. So that 57,000 is taxed at 0%. Therefore, under income tax, we have 0. Then we have similarly for pen, we have 91,000 kwacha there. 91,000 kwacha, you remove the tax-free income of 57,600, that leaves you with 33,400 under pen. Whereas for partner folder, you're going to remove 57,600 from 64,000. That will leave you 6,400. Now, you know that individuals are taxed using marginal tax rate. The first one is 57,600 at 0%. The next one is a maximum of an interval of 24,000 at 20%. The next one is a maximum of an interval of 25,200, which is subjected to 30%. Then the balance, if you look at the cumulative total of income, meaning that anything excess of 106,800 will be taxed at the 7.5%. So that is being followed here. So let's follow through and see how this is done. For books remaining with 87,400 after deducting 57,600, we go ahead and look at the next tranche of the interval, which is a maximum of 24,000. That is taxed at 20%. That is taxed at 20%. So we remove 24,000 from 87,400. We are going to remain with 63,400. If you calculate 20% of 24,000, that will give you 4,800 as the tax paid on that slot. Equally, the same applies to pay. We remove 24,000 from the 3,400 to remain with 9,400. This 24,000 is subjected to 20%, therefore we have a 4,800 there. For folder, after removing a tax-free income of 7,600, we remain with 6,400. And this 6,400 is falling within the income slice of 24,000 maximum, which is taxed at 20%. Since what is remaining out of folder's income after tax-free income is only 6,400, we are going to subject that one to 20%. And 20% of 6,400 will be 1,280. So we consider the next stage. We are going to look at the next tranche or next interval, which is 25,200, which is taxed at 30%. So the next layer of 25,200 of one's income is supposed to be subjected to 30% income tax. So when you have 25,200 deducted from 63,400, we are going to remain with 38,200 under books. So if you calculate 30% of 25,200 and 200, you are going to get 7,560 as the tax. For pen, after deducting 24,000 from 33,400, we only remain with 9,400, which falls in the tier where you have a maximum of 25,200 of the income to be taxed at 30%. Since this is the only amount that is entering that layer, we tax it at 30%. We find that 30% of 9,400 will be 2,820. And with that ends the income being taxed under pen as well. But for books, we still have an excess of 38,200 after removing 25,200 from 63,400. So this 38,200 enters the next slice of income to be taxed at 37.5%. So 38,200 kwacha will be taxed at 37.5%, which it being a balance. So we tax that one, and we find that you're going to get a tax of 14,325. So that ends all the income under books being taxed. So the next stage we look at is just look at the tax column and add all the income tax that has been computed. So under books, you add 0 to 4,800, then 7,560, and 14,325. You get a total of 26,685. Under pen, you add the three taxes: 0 kwacha, 4,800, 2,820. We get 7,620 as the total tax. Under folder, you have 1,280 added to 0, which is still 1,280. So these figures under the separate partners represent the total tax liability for charge year 2023. So that's how we deal with the partnership taxation, where there is no change in partnership agreement during a charge year. Let's look at example number 2. In this particular case, we are going to be looking at another scenario, in this case where there is a partnership agreement change partway through the charge year. In this example, we have spoon, fork, and plate that run a partnership business in food and beverages. During charge year 2023, the partnership realized a taxable profit of 400,000 kwacha. For the first quarter of 2023, only spoon and fork were in partnership, sharing profits and losses equally. According to this agreement, a salary per month of 40,000 and 20,000 are to be awarded to spoon and fork respectively. We are further provided that on 1st April 2023, plate was introduced into the partnership, prompting the partnership agreement to change as follows. 1. Profits or losses were to be shared in the ratio 5:3:2 for books, pen, and folder, respectively. And the partners are to receive 60,000, 40,000, and 36,000 kwacha for spoon, fork, and plate, respectively, per month as a salary. Required: show the partners' taxable income for the charge year 2023. B. Determine the tax liability for the partners in the charge year 2023. So how do we handle this type of situation? Like before, you come up with a table which is going to show the partners involved, the spoon, fork, and the plate, and of course the total column. And then in this particular case, we find that since there is a change of partnership, it simply means that we are required to divide the whole year into 2 notional periods. The first part of that particular charge year is made up of 3 months, from 1st January 2023 to 31st March 2023. The second notional period is a 9-month period, from 1st April 2023 to 31st December 2023. like before. We have to show under each notional period 3 things. 1, the partner's salary. 2, share of residual profit. 3, the subtotal. So we start with the first notional period running from 1st January to 2023 to 31st March 2023. In this particular case, note that the salary which was awarded to the 2 partners was 40,000 and the 20,000 for spoon and fork. Now these are annual salaries. Therefore, we should only get a proportionate amount relating to 3 months. So, since 40,000 is for the whole year for spoon, it simply means that is for 12 months. So, what should be the salary for 3 months? It should be 3 out of 12, then multiply 40,000. You are going to get basically 1 quarter, which is multiplied by 40,000 to get 10,000 kwacha. That's why you are seeing 10,000 kwacha appearing under spoon for the first 3 months. Equally, the treatment is extended to fork. Fork was awarded a salary per annum of 20,000 kwacha. Now, since we are looking at the 3-month period, that is 3 out of 12 multiplied by 20,000, we are going to arrive at 5,000. So once we have 10,000 and 5,000, we add the 2, we are going to get a total of 15,000 under partner salaries. Once we have obtained the total, then we also look at how much is the taxable earnings for the partnership. In this particular case, we are told that the partnership realized a taxable profit of 400,000 kwacha for charge year 2023. So now, because we have divided the total 12 months period into 2, we also apportion this profit into these 2 periods, 2 notional periods. So the first one is 3 out of 12 times 400, which is 1 quarter times 400. That gives us the 100,000 you are going to see under the subtotal for the first 3 months period of 1st January to 31st March 2023. So we have 100,000 there and we have 15,000 there as partner salary and 100,000 subtotal. So we find the difference. The difference will account for the residual profit, which is 85,000. Now this 85,000 is what is supposed to be shared by the partners. You share this 85,000 by the partners. So there are only 2 partners involved in the first notional period. There is spoon and fork. And the profit sharing ratio is 5:2. So you add 5 plus 2, you get 7. Then you get 5 out of 7 times 85. You are going to get, we are going to get, the partnership agreement tells us that these are supposed to share profits and losses equally. So they are supposed to share profits and losses equally. So let me just adjust on this one. They are supposed to share profits and losses equally. So meaning we have in this particular regard 50-50 or 50%. So it is we can say equally shared equally, profits equally. So just say equally here. Okay, so that's the situation according to the question. It's supposed to share profits equally, means that this residual amount is supposed to be shared equally. So divide this 85,000 by 2, we are going to get 42,500 under spoon and 42,500 under fork. So once you have shared the residual income, then your next step is just to add the partner salary and the shared residual profit. Under spoon, we have 10,000 plus 42,500 ending with 52,500. Under 4, we have 5,000 added to 42,500, ending with 47,500. So that's done for the notional period for the running from 1st January 2023 to 31st March 2023. We look at the second notional period, which is 9 months period of 1st April 2023 to 31st December 2023. Likewise, we start with looking at the 3 items: the partner salary, share of residual profit, and also subtotal. Now, if we calculated to say out of the 400,000, 100,000 relates to the first 3 months. It means that the 300,000, which the balance, relates to the next 9 months. So that we have 100 plus 300 getting back to 400. Likewise, we seen that the partnership agreement brought certain changes. They brought certain changes. So what changes did they bring with them? Okay. Under this one, we notice that the profit sharing ratio changed from equal proportion to that of 5:3:2. And the salaries involved are 60,000, 40,000, 36,000 for spoon, fork, and plate. So how do we deal with that type of situation? In a similar manner, these salaries of 60,000, 40,000, 36,000 are annual salaries. But we are looking at a reporting period of 9 months. So we are going to get a proportion of that annual salary which relates to 9 months period. So if you look at 60,000, we are going to multiply that figure by 9 months over 12. It will give us the 45,000 under spoon. Equally, for fork, we have 40,000 multiplied by 9 over 12. It will give us 30,000 under fork. Whereas for plate, we have 36,000 multiplied by 9 over 12. It will give us 27,000 kwacha under plate. Okay, so that's what we have under plate. Okay, fine. So once we have done that, we add these 3 salaries. That will end up giving us a total of 102,000 kwacha. Then we compare 102,000 kwacha to 300,000 kwacha for this notional period running from 1st April to 31st December 2023. The difference between the two figures is 198,000 kwacha. This is to be shared in the profit sharing ratio of 5:3:2. And if we follow the same approach, we are going to have 5 out of 10 portions times 198,000. We are going to have 99,000 under spoon. Then 3 out of 10 portions multiplied by 198,000, we are going to have 59,400 to come under fork. Then we are going to have plate, which is going to have 2 out of 10 multiplied by 198,000, the profit to be shared. You are going to end up having 30,600 kwacha under plate. So like before, we add the partner salary to the share of residual profit. Under each partner, we have 45,000 plus 99,000. Under spoon, we end up having 144,000. Under fork, we add 30,000 to 59,400. We end up having 89,400. Under plate, in the first notional period, there was nothing. We only have something under the second notional period, which is 1st April 2023 to 31st December 2023. So we add 27,000 and 30,600. We are going to have 6,000. We're going to have supposed to be 57,600 600. We are supposed to have 57,600. Okay, that is how it's supposed to be. So when we just change this, okay. So when you add this, it's supposed to have 57,600. 57,600, not 66,600, but 57,600. That is what is supposed to be the total. Okay, so now with that in mind, we move on to look at the grand total. The grand total will be add the subtotal above, which is the first 3 months, and the subtotal in the second notional period. We have 100,000 plus 300,000, we have 400,000 kwacha. Likewise, under spoon we add 52,500 to 144,000, we have 196,500. Then fork, we have 47,500, add 89,400, we have 136,900. Then for plate, there's nothing in the first notional period, we only have 57,600. That's what we are ending with. Okay, so that's what we have as the amount which is taxable under each partner. So we now look at how are these partners going to pay tax. So like before, we look at this one. This one is supposed to be 57,600. Okay, 57,600. Okay, 57,600. Okay, that's what we have. 57,600. Okay, 57,600. If that's the case, simply means that when you look at this computation, it means that here we're going to have 0, and that ends it. Meaning that here we don't going to have anything, because all of it will be swallowed up by the tax-free income, so there will be no tax paid here. No tax is paid here. Okay, so now we bring the taxable income in this part where we're trying to calculate how much tax is supposed to be levied for these particular partners. So where are we getting the figures from? So for spoon, we calculated 196,500. For fork, we have 136,900. For plate, we have 57,600. Okay, so we come with it. We put them here. Taxable income 196,500, and for fork 136,900. For plate, we have 57,600. Now, as before, in tax year 2023, the government of the Republic of Zambia has awarded tax-free income on the first layer of your income in a particular charge year. Shall be tax-free or taxed at 0%. So here we see this particular illustration showing that tax-free income 57,600 at 0%. We knock it off from the total taxable income. Under spoon, we remove 57,600 and it is taxed at 0%. Therefore, income tax will pay 0 kwacha. Under fork, we remove 57,600. It is taxed at 0%. You get 0 kwacha income tax. Under plate, you remove 57,600 and you tax at 0 kwacha at 0%. So you pay tax 0 kwacha. So for plate, it ends the story, means that under partnership plate, plate during the charge year 23 will never pay, we will not pay tax, we will not liable to pay any tax. But there is something remaining after removing 57,600, which is a tax-free income under spoon and fork. In this regard, we proceed to look at the balance, which is 138,900 and 79,300. So we see that in this particular case, this falls off, this one. Okay. So we only have this amount. Okay. Only have these amounts. So the next chunk of income is 24,000, tax at 20%. So we remove 24,000 from 138,900, tax at 20%, that gives us a tax of 4,800. The same applies to fork. We remove 24,000, that gives us tax of 4,800. So with that, it takes us to look at a balance of 114,900 under spoon, and then balance of 55,300 under fork. So let's look at what happens. It means that we enter into the tax bracket where the next 25,000 maximum interval is taxed at 30%. So the next layer of income of 25,000 maximum, 25,200 maximum is taxed at 30%. So we can afford to remove 25,200 from 114,900 and remain with 89,700 under spoon. We can also afford to remove 25,200 from 55,300 under forks and still remain with 30,100. So this 25,200 is taxed at 30%, hence we have 7,560 under spoon against 7,560 under fork. Now we enter into the last bracket where the balance is taxed at 7.5%. So the balance under spoon, which is 89,700, is taxed at 7.5%, hence we pay tax 33,637 kwacha 15 ngwe. Whereas the balance under fork, which is 30,100, is also taxed at 7.5%. We get tax of 11,287 15 ngwe. So when you remove these balances, it closes the account. Then what follows now is just for us to add. We just add the total tax calculated in this case. Total tax calculated. So we start with spoon. We have 0 plus 4,800, then plus 7,560, then finally 33,637 15 ngwe. That will give us a total of 45,997 kwacha 15 ngwe. The same applies to fork. We add the income tax column. That's 0 plus 4,800 plus 7,560 plus 11,287 15 ngwe. We get a total of 23,647. When you come to the other one, which is a plate, again we are going to show that we shall show that we have to add the income tax column, and when you add for this one, since there was no tax paid, we find that there is still 0 here. So plate paid nothing for the charge year 2023 because all the income was equivalent to the tax-free income. That's what we noticed. All the income was equivalent to the tax-free income. So the income under plate was exactly equal to the tax-free income, which is taxed at 0%. So no tax is paid by plate. So when we come to this particular end, we notice that these totals are reflecting of the tax liability for charge year 2023 for spoon 45,997.50 ngwe, for fork 23,647 kwacha 50 ngwe, and for plate 0 kwacha. So that reflects the tax liability for the partners. So that's how we handle this particular kind of tax question relating to partnership. We come to an end of this particular presentation. Please remember to subscribe to my channel and like my videos. We are going to look at other tax topics coming soon. Please look out for them. Thank you for listening.